All right, let's now also bring you some corporate commentary. We have spoken with Mr. Surana of HPCL on some of the recent developments, the share buyback in particular. Here's his take on the buyback as well as some of the other recent developments, earnings, outlook and otherwise.
Yeah. So as far as HPCL is concerned, as you know, we had been always investor friendly. We have rewarded liberally to the investors in the past by bonuses, dividends, etc. A company can reward a shareholder in three ways, either by bonus or by dividends or through buyback. Buyback is an arrangement where it provides an opportunity for the people to have a larger share of the total profitability of the company because the total number of shares reduces. So the people who continue to be invested in the company, they get better and better value for per share of theirs, even if the total overall profit is the same. So it is a same pie, it is being shared by a lesser number of people, and so it creates additional value for them. Second thing is the people who wish to exit also, it provides an opportunity to exit. So buyback is an arrangement which is profitable for all the shareholders, whether it is a big, whether it is small, whether he's invested, whether it is continued to be invested, whether he was invested in past, either way. So as far as shareholder concerned, it is a way of creating value for the shareholders. As far as company is concerned, I believe that as of today, the cost of borrowing versus cost of equity, the cost of borrowing is lesser than the cost of equity. And therefore, it is advantageous for the company to have a buyback to some portion so that it also have a better financial management and the debt management, and it can leverage the availability of the lower cost of borrowing. So our total size is around 2,500 crore at the maximum of the price, which is around 6.75% or so. And it is at 250 rupees, which is around 34% premium to the current market. But we will be doing through the market transaction. And as far as ONGC is concerned, they will not be participating because in the market transaction thing, as per the guidelines, the promoters do not participate. In any case, ONGC hold only 51.11% of the share. So they don't have that leeway also to participate in that. And as far as the value is concerned, I always maintained that HPCL has got a lot more intrinsic value than what is reflected. And it is our job to ensure that the value is unlocked for the shareholders. And I think that this is one of the ways to do it. HPCL has enjoyed a lot more credit worthiness than many of our peers. In fact, if you see the history, we had been able to borrow at a very, very competitive rates. And in that case, the post-tax cost of borrowing comes much lesser than the dividend which we pay, which is actually after the taxation. So if you do the mathematics, the cost of equity will come always costlier than the cost of borrowing. And in the current situation when the share prices are low and the cost of borrowing low, this is one of the best times for any company to think of the buyback. Yeah, so in the quarter Q2, there was an inventory gain of 1,780 crore versus a 53 crore in the last year same quarter. And out of that, if you see the refinery part, the refinery GRM is 5.11. In that $2.33 was the inventory gain.